Hi, and welcome back to FANG Friday. This is Ross Healy, and I'm the Chairman of Strategic Analysis Corporation. As we have discussed over the past few weeks, we wanted to give our viewers a record of our calls here on the FANG Friday webcast based on what we have seen in the SBA charts in order to show you how you can improve your own investing. Since we started in March, we've had several what I might call informal calls, so we went back through our videos to see what they were and how they have performed. In our March 15 video, for instance, we started off by recommending Amazon and Nvidia as our two buy holds. We have maintained that buy on Amazon, but we sold our Nvidia position in our May 3rd video, buying Facebook on its breakout instead. Essentially, therefore, Amazon and Facebook have been our sole to buy selections, and the rest are largely being sells or avoids, which I guess you can think of as being the same thing. Now, if we had invested $100,000 with equal weighting, our performance would look like this. Essentially, eliminating the average or underachievers, our buys average a return of 14.7% over the period since March the 15th. In comparison, if we had bought and held all the FANGs up till today, our return would have been plus 6.9%. We have not specifically measured our outright sells, Alphabet, Netflix, and Nvidia, although two of the three are down and Netflix has barely broken a sweat. Had you bought and held the S&P 500 instead, your return would have been 5.7%. So the FANGs as a whole have sort of outperformed again, although not nearly as profitably overall as they have been in the past few years. Overall, our simple picks have really outperformed both the market and the buy and hold strategy. Anyway, enough of that. Let's take a look at the FANGs this week and see what we would do now. Okay, as usual, I will start with Amazon because it's the easiest one of the lot. It has remained pretty much in its channel, and as I have said to you before, that channel is rising at about a 30% rate, so we're just happy to be aboard Amazon and just let it go for the time being. Facebook, I did give us a little sort of a false start here, and but very quickly hopped back on side as we thought that it would, and the stock continues to perform quite nicely. We remain as a buy hold in this stock. Apple it sort of appears more of a conundrum than it actually is. And that's because the stock, when you see it here, is trading at both at its fair market value and also its structural point at its bubble price, or 7.4 times book value. But two things about this stock. The first is that if we go back for 10 years, it turns out that the fair market value is about the absolute maximum that this company can attain, and it's there. So, unless there is a violent turnaround in the earnings, and following the previous quarter, I don't see that that's going to happen. As far as we're concerned, we will continue to avoid investing Apple at the current price. The other thing is that we actually don't know where the bubble price is, because Apple has been buying back stocks in sort of fits and jerks, and it could be that when we finally get the balance sheet that they will have bought back a lot of stocks, and therefore the bubble price will be much lower than the current level of 201. So what we do is we continue to use the fair market value as our marker as a buy, hold, or sell for this stock. Alphabet remains pretty much as it is. We had it as a sell almost from the get-go. The stock has never reached good support at the super growth price. That's 3.5 times book value, and it continues just to meander between those two levels, but closer to the super growth. I'm still hoping that it will get down there and will give us a buy opportunity. Netflix, what can we say about Netflix? It just sort of continues to go sideways and not really get anywhere. In the meantime, more and more competitors appear to be entering its streaming space. So we are a little concerned about the longer-term outlook for the growth of this company. We continue to rate this as an avoid. And finally now, here is what I might call a structural valuation conundrum. So here's NVIDIA. With the resurgence of the Bitcoin, the stock turned right around and roared right back up again to its HB1 price. That's 10 times book value. But it got there, sort of poked a little bit above here, which you can see, and then immediately said, whoops, a little too high, and has pulled right back down again. What the company is essentially doing here is waiting for the second quarter earnings. If the numbers are really good, which this little kind of faux breakout appeared to signal, then we may see a jump in the stock. If the earnings are lousy, as indeed they were for the first quarter, we may well see not only a setback, but a fairly deep setback, perhaps all the way down to its bubble price. That's 7.4 times its book value as a potential trading low. Right now, we don't know, so we are watching and waiting. If there is an issue, a question about using SVA, it occurs right at breakpoints, right when earnings are about to be released, and when you have companies that are on the overvalued side. In fact, NVIDIA is about 37% overvalued. So those earnings, A, better be there, and B, they'd better be good. Okay, in recap, then, we continue to hold and indeed would continue to buy both Amazon and Facebook. As far as Apple is concerned, and Netflix and Alphabet, we would continue to avoid those stocks. NVIDIA, as I showed you earlier, presents a different kind of a problem. It is trying to decide what it's going to do, and what that is, we still don't know. As we continue our FANG Friday series, we will update our FANG, what I would call phantom portfolio, as it were, from time to time to show you the potential performance that you could get against those two benchmarks, the FANGs themselves and the S&P 500, to see what is possible if you simply follow the SVA methodology on these free educational videos. By the way, the same valuation and trading principles can be applied to any stock index. And I will tell you that since we started in 1993, we have yet to meet an index that you cannot beat using structural valuation analysis. I would remind you that clients get, among other things, access to these charts and can also look at the SVA structural valuation analysis of over 3,500 North American publicly traded securities on the TSX, the NYSE, the Dow, and the NASDAQ. We will continue to update our performance against the benchmarks from time to time, and we hope that you will take advantage of the content in these strictly educational videos to experience the returns that we have shown you here today on FANG Friday for the rest of the year and beyond. Finally, we are currently offering a 3-month trial to our next 10 clients at a 70% discount to a regular rate. The special pricing includes personal, tailored explanations of how to use our charts for your own stocks. If you hold companies other than the FANGs and want to be more knowledgeable, confident, and get a solid edge in investing. Anyway, this is Ross Healy, Chairman of Strategic Analysis Corporation, reminding you that nothing, including investing, is difficult if you have the right tools. See you next week.